Hi there, welcome back to Dukascopy TV. I'm Ben Jones. With continuing worries of a slowdown, China has released some very positive trade balance data today. So joining me on the line to analyse the figures is Gero Jung from Mirabaud Asset Management. So Gero, both exports and imports in China have gone up for April, with a trade surplus of over $18 billion. With all the talk surrounding China at the moment being about a slowdown, what's the impact of these figures?
We do have a constructive view on Chinese growth for this year and for next year. What we can see in the recent data on imports and exports is that both imports and exports have increased. That is a positive, meaning if imports are increasing, domestic demand remains intact. That's the first thing. Second thing is exports are increasing, and this could actually be a turning point for Chinese growth and for Chinese export growth, since we expect the global economy to accelerate, and in particular industrialized countries to accelerate. From the recent data, we see, for instance, that exports to the US and to the Europe have increased in double-digit numbers. That is a positive, and we think as these two economies will improve further, Chinese exports will be able to profit from them. So overall, we retain our relatively constructive view on Chinese growth. China will have a growth rate that will be volatile, but will improve, we think.
Now, one report, the Purchasing Power Parity, has stated that China's economy is likely to overtake the economy of the US at some point this year. Most reports pointed to this happening much later on. What's the significance of this individual report?
Yes, what we do see is that when we look at nominal GDP numbers, so for instance in current US dollars, China is still a much smaller economy than the US. So I think we should not over-interpret these numbers that is based on purchasing power parity terms. What we also think is that we should, at the global level or a broader macro level, we should not forget that GDP per capita, according to the World Bank, is at around $6,000, whereas the US GDP per capita stands at around $52,000. So the US economy or US inhabitants are still much richer, and there's still a lot of development to do in the Chinese economy that probably this PPP number does not reflect.
And finally, CPI data for China is released tomorrow. What are you expecting here, and what will it mean for China's economy?
What we probably will see is that the inflation figure will be relatively low, namely below the official target of the Central Bank of China, the PBOC. What that means, we think, is that Chinese monetary policy will remain accommodative. That is in line with other countries. We've seen at a global level very much a disinflationary trend. Inflation has been low, will remain low. That is also the case for China, and Chinese monetary policy will remain very accommodative, we think.
Gero, thank you very much for joining me today. That's all from me for now. Thanks for watching, and make sure you keep clicking back to Dukascopy TV.